Welcome to the McAfee and Taft webinar series. The topic for this webinar, Opportunity Zone Tax Incentives. The Tax Cuts and Jobs Act of 2017, which was signed into law last December, created a new economic development tool designed to incentivize eligible taxpayers into making investments in businesses and real estate developments located in low-income census tracts that have been specifically designated as Opportunity Zones. On October 19th, nearly 10 months after the federal tax bill was signed into law, the U.S. Treasury Department issued its highly anticipated proposed regulations governing the Opportunity Zone program, paving the way for increased economic development and job creation in such zones. In this presentation, we will provide an overview of the Opportunity Zone Tax Incentive Program, discuss the recently issued regulations, and answer your frequently asked questions about this new program. Our presenters are McAfee and Taft attorneys Cheryl Vinall Denney, Gonzalez and Ryan Anderson, all of whom are members of the firm's Economic Development, Tax Credits, and Business Incentives Group. Cheryl serves as the co-leader of that group and has particular expertise in general economic development law, community development finance, and structuring private equity transactions to qualify for a myriad of tax incentives, including new markets tax credits, federal and state historic rehabilitation tax credits, tax increment finance districts, and opportunity zone incentives, among others. Both Bonner and Ryan hold Master of Laws degrees in taxation and represent individuals, privately held businesses, and public companies in the areas of business and tax planning, business entity formation, complex business transactions, local, state, and federal taxation, and tax advantage activities, including business incentives and state and federal tax deductions and tax credits. So with those introductions, I now turn it over to you.
All right. Thank you for that introduction and welcome everyone to the Opportunity Zone webinar. We appreciate your time. Opportunity zones have been obviously a great topic of discussion among the industry, and I'm sure many of you have seen articles in Wall Street Journal, Washington Post, major publications talking about this benefit. So we're happy to provide some content here and some detail for you. We have a lot of people from different backgrounds listening to the program. Some of you probably already have a basic knowledge or maybe even more than basic knowledge about opportunity zones. Some of you might be brand new. So how we're going to tackle the subject is we're going to start with a little bit of history, an overview of the incentive and why it's gotten everybody so excited within the industry. And then we're going to dive deeper into some of the requirements of the incentive. And then we're going to talk a little bit about how the incentive can be combined with other tax credit programs like new markets, affordable housing, and historic. Touch a little bit about how foundations and not-for-profits might participate in opportunity zones. And then many of you have submitted questions when you registered. We're going to address some of those as we talk about other subjects, but then we have some time reserved at the end to address a few more of the questions. So with that roadmap, we're going to jump in. I, for one, am very happy to be talking with you today because at the end of last year with tax reform, there was a lot of question as to whether tax incentives were going to survive. And happy to say that all the tax incentives that we normally work with did survive, some with slight changes, but they survived. And then we got this brand new tool that was kind of a surprise come January called the Opportunity Zone Program. So we kind of jumped in and everybody started learning about the program and looking at the statute, which is all that we had. And then the IRS issued some FAQs and a little bit of guidance in the spring and the summer, mostly focused on designation of opportunity zones and a little bit about certification of funds. And we were all eagerly anticipating issuance of proposed regulations. And that's what spurred this webinar is proposed regulations were issued a few weeks ago, I think 2 or 3 weeks ago now. So we have a little bit more meat on the bone to talk about. Those were just proposed regulations. So we're anticipating that another tranche of regulations come out hopefully by the end of the year. Those existing regulations or the proposed regulations have some placeholders that are going to be fleshed out by Treasury in the coming weeks and months. They've asked for comment on some of those areas. So I think the entire program or incentive is still kind of a work in progress.